Hello everyone, welcome to my YouTube channel Mars Commerce Learnings. In this video, I'm going to solve financial management previous year question paper of 2025. Let's move to questions. First, we will wind up all theories, then we will move forward to practical one. First question, state any two components of working capital. Components means you have to write both current asset as well as current liability. If you mention that is said to be what component. So that's what we are having here. Cash, cash equivalent, inventories, accounts payable, that is creditors, debtors, and all such things you can mention. Next, define financial management. According to Joseph and Messi, financial management is the operational activity of a business that is responsible for obtaining an effective utilization of funds necessary for efficient business operation. Next, what is operating leverage? It is a measure to establish relations between firm fixed cost and variable cost and its impact on profit. In simple, it is the ratio of fixed cost to variable cost. Formula contribution by EBIT. Even you have to write formula that will add advantage. What is time value of money? Value of money in finance means that money available today is worth more than the same amount of money in future. That is, whatever money you have today, that is, suppose you have 1 lakh rupees today, that is more worth than 1 lakh rupees after 1 year. Next, what is financial planning? Financial planning involves analyzing the financial flow of a company, forecasting the consequences of various investment, financing and dividend decision, and weighting the effect of various alternatives. That is, you have to plan where you have to invest, from where you have to raise amount, and how much dividend you have to distribute, how much you have to retain. That all things comes under financial planning. Another question, if initial investment 2 lakh rupees residual value 4 lakh, working capital, working life 10 years, additional working capital 2 lakh, calculate average investment. Now coming to this one, formula for average investment is original investment minus scrap value divided by 2 plus working capital plus scrap value. If we don't have additional capital, then this particular portion won't come because we are having working this one additional working capital. So we have to add this with the scrap value. Now we will put figures and we will get average investment as 14 lakh. That is original investment. 20 lakh residual value, that is scrap value 4 lakh divided by 2 plus working capital, that is additional working capital 2 lakh plus scrap value, that is 4. If you simplify, we will get average investment as 14 lakh rupees. Next, profit before tax 2 lakh rupees, tax rate 50%, number of equity share 10,000, calculate EPS. We have to calculate what? EPS, earning per share, we have to calculate. For that, we have to first and foremost calculate earning available to equity shareholders. That is profit before tax. 2 lakh tax, they have given 50%. So if we deduct, we will get to 1 lakh as profit after tax. Have not provided any information of preference shares. So its preference dividend is nil. Whatever earning left that belong to equity shareholders. If we divide with number of shares, that is total number of shares, we will get earning per share. That is 1 lakh divided by how many shares we are having? Equity share 10,000. So earning per share, one share, how much amount you will get on one share? That is 10 rupees. Earning per share is 10 rupees. Next question. This is also practical one. Calculate present value of 80,000 received after 6 years if discount rate is 9%. That is, if you are receiving 80,000 after 6 years and discount rate is 9%, what is present value, present worthness of that particular value you have to calculate. For this formula is future value divided by 1 plus I to the power of n. Future value means how much amount you are going to receive after 6 years. 80,000 divided by 1 plus I, that is 0.9% means 0.09 to the power of 6 means after 6 years. If you simplify, we will get 80 by 1.677. The answer is 47,701. That is present value is 47,701 is equal to the same amount will become 80 after 6 years if discount rate is 9%. Next question. Now we are moving forward to 4 marks questions. For SCP and all, you will get for 8 marks. For NEP, 4 marks question. Section B. Mention the functions of financial management. We are having so many functions right from anticipation of fund, where we will get estimation of financial requirement, how much fund you require, determining capital structure, that is various sources of fund. The next, acquisition of capital. Once you know, then you have to identify sources which you are having long term or short term, equity, preference, and all. Then you have to select that source, debt, equity, debenture, whatever it may be, loan. You have to select. The next, allocation of fund, assessing risk as well as return. Also, you have to check before allocating. Then you have to invest. Once you analyze all things, so this particular portion comes under what? Capital budgeting. Then next, appropriation of fund. Once you allocate, whatever profit you will get, you have to decide whether you have to distribute or you have to retain. Distribute means dividend. Whatever you will retain, that will known as what? Retain earnings. Then assessment, whether whatever you are doing it is right or wrong. If anything is not working properly, then you have to change your plan. The next question. Briefly explain the motive of holding capital. Why you are holding capital? Normally, we are having 4 motive for holding cash. First and foremost, transaction motive. If you want to do any transaction, buying and selling, in such cases, if you want to buy anything, then you have to hold cash. Precaution. To if you think future is unrealistic, so to what was now counter that calamities and all, if you are holding cash, that is known as what? Precaution. The speculative means taking advantages of future opportunity. If you are holding cash, that is what? Speculative. Compensating, just like the minimum balance, cash balance what you will kept in bank to avoid charges or penalty from bank side. So that is what? Compensative motive. These are all what? 4 motives of holding cash. Next question. Calculate future value at the end of 5 years of the following series of payment at 10% rate of interest. That is, first year, at the end of first year, you are investing how much? 4,000. Next, 5, 6, 7, 8. 5 years you are investing this much of amount at 10% rate. Then after 5 years, how much amount you are going to get? That we have to ascertain. Now future value formula. That is P1 principal plus 1 plus I to the power of n minus 1. Likewise, we have to simplify, because at the end of n we are having 4,000 at the end of first year. So 1 minus 1. If 4,000 beginning of every year means it will start from n minus 1, n minus 2. It will go like this, because we are making payment at the end of first year. So n minus 1 formula, as it is deferred annuity. Now, if we have to simplify this one, 0.1, that is 10 divided by 100, that is 0.1. The same thing we have to write now. 4,000, that is first year, plus into 1 plus 0.1, n minus 1. N means how much? 5 years. 5 minus 1, this is 1 first year. So 5 minus 2, 5 minus 3, 5 minus 4, 5 minus 5. If we simplify, we will get this much of answer. Likewise, you have to calculate discount rate, and you will get the future value after 5 years, that is 35,471. 471 answer you are going to get. Next question. Your firm has sale of rupees 20 lakh, variable cost 14 lakh, fixed cost 4 lakh, 10% debt capital 10 lakh. Calculate operating, financing, and combined leverage. Here you have given 20 lakh sale. You are have for that one you are incurring 14 lakh as variable cost, fixed cost 4 lakh. You have taken 10 lakh rupees loan at 10% rate of interest. With this information, we have to calculate all leverages. Now coming to first one. Sales we have 20 lakh minus variable cost 14. If you simplify, we will get contribution that is 6 lakh. Then deduct 4 lakh as fixed cost, you will get earning before interest and tax 2 lakh. Then you have to deduct interest that is 10%. 10 lakh into 10%, 1 lakh, and you will get earning before tax 1 lakh rupees. Now apply formula. We have to apply three formulas: operating, leverage, financing, as well as combined. If you simplify, you will get all this answer. That is 6 lakh divided by 2, 3 times. EBIT by EBT, 2 lakh by 1 lakh, 2 times. Combined leverage, just you have to multiply operating into financing. Next one. We have to calculate payback period with the help of this particular question. Here in table they have given cash inflows. GM Company Limited is considering to purchase a machine out of two alternatives, each costing 6 lakh. The expected cash inflows were as under. You are having two machines, X as well as Y. You have to calculate payback period. Both machine will, if you want to purchase machine, you have to incur 6 lakh rupees. Now, which one you have to opt? That you have to select. Which machine you have to select based on payback period. Now, let's directly move on to solution. Let's see. First, what we have to do, because they have given cash inflow, so directly what we have to do, we have to calculate cumulative cash inflow. 80,000, 80 plus 2 lakh 40, 4 lakh 20, 4 lakh 20 plus 3 lakh 720 plus 189, 9 plus 120, 10 lakh 20. Now apply formula. Payback period formula. Year before full recovery plus unrecovered amount divided by cash flow during the year. How much amount you have to invest? 6 lakh is what cash outflow. That is, in which year you are going to recover all 6 lakh? That is in third year. So year before full recovery is what? 2 year. 2 year plus unrecovered amount. 6 lakh you have to invest. In for second year, we have in recovered 4 lakh 20. So 6 minus 4 lakh 20, 1 lakh 80 divided by cash inflow during the year. That is in third year. That is your earning cash inflow is 3 lakh. Simplify and you will get the payback period as 2.6 years. Likewise, you have to calculate for machine Y. Calculate and let me know. If you calculate, you will get the machine Y answer as 3.33 years. Now, same, whatever we have done in machine X, same thing you have to repeat for machine Y as well. You will get payback period as 3.33 years. Now, which machine is better? Machine X. Yeah, of course, because payback period is less. Therefore, GM company have to opt machine X. The next question, that is seventh one, section C, 12 marks question. Who is finance manager? What is the role of finance manager in an organization? In simple, financial manager, the person who will handle all financial related tasks of one particular firm. Now let's say functions of finance manager. Functions of finance manager, he will forecast financial forecasting, selection of right source, allocation of fund, that is once he select sources, long term as well as short term, equity, preference, debt, loan, debenture, whatever it may be. After analyzing, selecting sources, he have to allocate, that is he have to invest that fund. Analyzing as well as appraiser of financial performance, that he have to cross check whatever invest may have done, it is going according to his plan or not, he have to analyze. Cost volume profit you also have to check. Working capital management also you have to consider to run company smoothly. Capital budgeting is also required because he is investing in long-term project. So he have to consider project capital budgeting. Profit planning as well as control also have to do. Fair investment to in fair returns to investor you have to provide, then maintain liquidity and wealth maximization. That is also the function of finance manager. Next question. What do you mean by working capital? Explain the determinant of working capital. Working capital is the amount to be used in day-to-day operating activity of a business. That is, in another way, you can say the total value of current asset is also known as what? Working capital. Determinants. If you want to select working capital, what are the things which you have to consider? General nature of business, whether you are having manufacturing or service industry. If manufacturing means you require more working capital, service means less working capital is also sufficient. Production cycle also impact your working capital. If it is more, then you have to invest more amount. If it is less, then you require less amount of working capital. Next one, cycle also impact your working capital. If your business is in boom stage, you have to invest more, or if it is in declining, you can keep less amount of working capital. Seasonality also impact. If season is there, you have to invest more, or else less amount of working capital is also sufficient. Competition also impact your working capital. Credit policy, that is how much credit you are giving to your customer. If you are having too much duration to repay your what else, no, if you are providing too much days to your customer, then you also have to keep more amount of working capital. If your credit policy is less, in such cases, less amount of working capital is also good. Growth expansion also impact your working capital. Availability of raw material, level of taxes, policy, price level, operating efficiency, all such things will impact your working capital, such as availability of raw material. If it is available 24 into 7, then you don't have to keep more amount of working capital only for the purpose of purchasing raw material. If raw material is you won't get raw material easily. In such cases, you have to keep more amount of working capital. Even apply for same thing apply for taxes. If tax rate is high, more. If taxes rate is less amount of working capital. If you are if you are distributing dividend, more amount of working capital. If you are retaining, less amount of working capital. So these are all determinant of working capital. Now let's move forward to next. That is the ninth question. Now we have to do practical one. Now let's move to ninth question. Mohit Limited company has equity share capital of 5 lakh divided into share of 100 each. That is 5 lakh equity capital 100 each means that is 50,000 shares he have. He wishes to raise another further capital of rupees 3 lakh for expansion. They required another 3 lakh rupees. Now they are having 5 lakh, another 3 lakh they required. For this, they are having four option. One, all common stock, that is equity they can raise. Another option, 1 lakh in common stock and 2 lakh in debt. 1 lakh from equity, remaining 2 lakh from debt capital, all debt capital. Third one, 1 lakh in common stock and 2 lakh in preference share. They can raise 1 lakh through equity, another 2 lakhs from preference shares they can raise. For them, they have to pay 8% dividend. The company EBIT is 1,50,000, tax rate 50%, determine EPS in all cases and suggest which plan is suitable. Now let's move to solution. EBIT they have given 1,50,000. This EBIT is applicable for all. You have to remember 1,50,000 is same for all. Now, four plan, like they have mentioned, one first plan says that all equity, second equity plus debt, that is debenture. Third one, 10% debenture. Fourth one, 1 lakh equity remaining 8%, preference shares. So next one, what we have to do, we have to deduct interest. In plan one, only we have equity show, because of that one, no interest. Second plan says that 1 lakh equity remaining 2 lakhs from debt. So 2 lakh into 10%, 2 lakh into 10%, because 10% rate of interest they have given, that is 20,000. Next one, 10% debenture. So all, how much amount they require? 3 lakh. 3 lakh into 10%, that is 30,000. Next one, preference. Equity plus preference. In both cases, we are not going to give any interest. So nil. If we simplify, we will get 1,50,000. Next one, 1,30,000. 1,50,000 minus 30, that is 1,20,000. Last one is 1,50,000. Now, tax rate, that is 50%. They have given 1,50,000 into 50%, 75,000, 65,000, 60,000, 75,000. Next one, if you simplify 1,50,000 minus 75, that is 75,000, 65,000, 60,000, 75,000 minus preference dividend. In which case you are having preference. First plan says that only common stock, so no equity, so no preference share, so nil. Second plan says that equity plus debenture, so no preference, nil, nil. In fourth plan only we are having preference shares, that is 8%. How much amount we are getting from preference share? 2 lakh. 2 lakh into 8%. 2 lakh into 8%, that is 16,000. Simplify and you will get earning for equity shareholders 75,000, 65,000, 60,000. 75 minus 16, that is 59,000. Now we have to calculate number of equity shares. First, 5 lakh divided by 100, that is 50,000, plus second, 3 lakh divided by 100, 30,000. If we add, we will get 80,000. Next one, plan B, 1 lakh common stock, that is first, initially they are having 50,000 as what? Equity. Older one, equity is 50, plus in new additional how much shares? 10,000. That is 1 lakh divided by 100. So 60,000 shares. Third plan, 50,000 equity plus all debentures. So it remains 50 only. 50,000 only. Next one, lastly, 50,000 plus 1 lakh common stock, that is 10,000 extra. That is new. That is 60. Now we have to divide and we will get what? EPS answer. EPS formula is what? Earning available to equity shareholders divided by number of equity shares. That is 0.9375 is what? Earning per share. Likewise, we have to do for all and we will get answer. Now, which one is higher? That we have to select. That is 1.2. So, company have to select plan C. So, company have to select what? Plan C. Now, question number 10. A firm whose cost of capital is 10% is considering two projects A, H as and R. The detail of which are, they have given investment, that is cash outflow 1 lakh each, cash outflow they have given 1 lakh, cash inflow they have given for 5 years, that is 2 lakh, 1 lakh 33,000. Compute IRR for two projects separately. Project H by 20 and 29%, project R by 9 and 15%. Use the following discount factor for calculating IRR. Now for move further to solution. First we will calculate for project H. Cash inflow they have given 20, 30, 40, 50 and 60. Discount rate they have given, that is 0.833, 0.94, 694, 579, 0.483, then 0.402. Then next, another discount rate also they have given, that is 29 discount rate is first year 0.775, 0.601, 0.466, 0.361, 0.280, 775. Now we have to multiply this 20,000 into 0.833. So the answer is 16,660. Likewise, we have to repeat for all 30,000 into 0.694. We will get this answer. Same thing we have to repeat for 29% present value of cash inflow at 29%. That is cash inflow 20,000 into 0.775, 15,500. Once we will multiply, we have to do addition, we have to do total, we have to make total present value of cash inflow. Now we will add all this one, we will get total of this. Same thing we have to repeat for next as well. Once we calculate this one, then we have to apply this formula, that is A plus C minus O by C minus D into B minus A. Now, what do you mean by A? Means this is lower rate of discount rate. Lower rate of discount rate means here we are having two discount rate, 20 as well as 29. So A equal 29. You have to remember this one. A, when we call A value is how much? 29%. 20%. A is what? 20%. Lower rate is 20%. Then next what else we have to do? Calculate, apply B. B means higher rate of return, 29%. C1. C means in lower rate of return present how much value we are having. Total present value, that is 1,08,910. D equal higher rate of present value of cash inflow. It is 7,020 rupees. Then O, original investment. Original investment we have to check in question. How much original investment? 1 lakh rupees. Simplify and let me know the answer in comment box. Same thing you have to repeat for project X, R as well. R 9A, because lower rate of return, higher rate of return is 15, discount factor. So B will become 15 for project R. Simplify, you have to calculate like this only and let me know the answer in comment box. Next, we will move forward to next question. This is same as what question number 9. Only amount varies. Here you have 1 lakh rupees, additional they require 50,000. For getting 50,000, you are having three options: equity, preference, then debenture. Earning before interest and taxes 30,000. 30,000. I'm directly moving to solution so that you will, if you are not understanding this one, refer question number 9 and you will get to know this one. Equity only, so no interest. Next one, preference share also no interest. 10% debenture is there. 50,000 into 10%, 5,000. Simplify, you will get earning before tax 30, then 30 minus 5,000, 25,000. Tax rate, how much tax rate they have given? Cross check once. If tax rate is not given, consider 50%. 15,000, 15,000, 12,500. So 15,000, 15,000, 12,500. Preference dividend, equity, so no preference dividend. Second, 12% preference dividend we are having. 50,000 into 12%, that is 6,000. Last one, debenture, so no preference dividend. Simplify, 15,000, 9,000, 12,500. Number of equity share 10 lakh. 1 lakh divided by 100, that is 10,000 plus 5,000 new shares. Total 15,000. 15 by 15 rupees 1. Then next equal old share. How many you are having? Existing share 10,000 plus new, no new shares, so only 10,000 shares. 9,000 divided by 10,000, 0.9. Last answer, number of equity share. How much? Existing 10,000 only. Because in new, we are issuing debenture. 12,500 divided by 10,000, 1.25. So company have to select plan 3. They have to select plan 3. You can write one statement. Therefore, Chinno company have to select plan 3 as EPS is more compared to other plan. If you write that one, then you will definitely will get all 12 marks. I hope you have understood this um, particular session. Thank you.